This morning, U.S. stock futures are pointing toward yet another low open. A day after the Dow briefly dropped down so low it erased all of its gains during the Trump presidency. European markets were off to a strong start today as the European Central Bank announced it will buy around $820 billion worth of bonds to ease markets, but tapered off as trading continued throughout the day. And yesterday, the Asian stock market index reached as low as 4.1%, its lowest point since 2016. Joining us now, financial editor of the Wall Street Journal, Charles Farrell, and editor-in-chief of The Economist, Zanny Minton-Beddoes. Thank you both for joining us.
Zanny, what does the European Central Bank look forward to doing in the coming weeks to calm the market jitters? And is there a feeling that Europe is handling this economic crisis any better than the United States?
Well, the European Central Bank, as you said, came in big last night with a 750 billion euro promise to buy more bonds. That was in some way making up for the fact that actually at the end of last week, Christine Lagarde, the president of the central bank, had sort of not really helped matters by sounding less than equivocal about doing what it takes to hold the euro together. They've now gone much, much stronger. But I'm not sure that Europe is handling this almost that much better. Europe is now the epicenter. I mean, you can see I'm talking to you from home. This is the first week ever we have put The Economist together completely remotely. There are rumors now that nobody's in our office. There are lots of discussion that London's going to be under lockdown within 24 hours. And, you know, so goes it across Europe. Italy, as you know, is the epicenter. And Europe is seeing a devastating economic hit. And I still think the European Central Bank and indeed European governments are way behind the curve in terms of the amount of stimulus and support they're going to have to give.
Charles, I'm wondering what your thoughts are as far as the United States response and the proposals that have been floated out there. I mean, we're a $21 trillion economy. If that economy is shut down for 3 or 4 months, $1 trillion suddenly, I can't believe I'm saying this as a small government conservative, but a $1 trillion relief package suddenly sounds like a drop in the bucket for a $21 trillion economy shut down for half a year.
The numbers are simply beyond anything that anybody has seen or really can conceive. It's an enormous, enormous stop in the economy. And it's not just it's a real stop. It's not just that there are some sectors that are slowing and things are a little bit bad. It is a full-on stop, and it's going to be very difficult to figure out how you find the demand, how you find the money to tide the economy over during that period. The real question, I think, is let's assume that things reopen and we don't end up in a very bad spiral. What does the economy look like when it gets back, and what can you do now to make sure that when it does reopen, it reopens in as good a position as it can be? But it's going to be very hard. The magnitude, the numbers are enormous.
Zanny, it's Jonathan Lemire. We just heard Senator Manchin suggest that Wall Street close for a couple of days. He suggested it wasn't an essential business right now. The White House is very opposed to that. We heard Treasury Secretary Mnuchin say earlier this week that there's some talk of perhaps reducing hours, but he didn't want to close the markets for fear of what message that would send. What's your take on that? Should the markets close for a couple of days? Would that steady things, let everyone cool off?
I don't think closing markets completely steadies things. I think that would just reinforce the sense of panic. There may be a case for shorter hours or something like that, practical reasons, but trying to stem panic by closing down financial systems, I don't think it's a very good idea. I mean, what we have right now, the reason everyone is such panic is that we have a total lack of understanding of how far this is going to go. I mean, the world economy is literally shutting down, and we don't know for how long, and we don't know when, even when it does emerge from this, whether it'll have to happen again. I mean, one of the striking things that we're learning as we find out more about this virus and the latest modeling that's been done here in the UK suggests that, yes, you can suppress infection rates if you shut down the entire society, but probably, because it's now so widespread, as you see this lift restriction, it's going to come back again. So are we going to have this suppression kind of intermittently until we find either a treatment or a vaccine? And I think no one can get their head around what that means in terms of economic cost, or if at some point you have to tolerate, practically, more casualties from the virus to prevent the entire world economy collapsing.
Yeah, Charles, in the United States, if you look at what's been happening with Wall Street, it seemed that every massive decline is followed the next day by at least a temporary spike up. People obviously have been trying to time the bottom of this market, and it has just crashed from 29,000 to 26 to 23, now obviously at 19. Are you getting a sense that the people you talk to believe that we're about to settle on the bottom of this market, or do they believe there's still a long way to go?
No, I don't get the sense that people believe that we can know that we're at a settling point. There have been down days and there have been up days, but the down days have greatly outnumbered the up days. There is an enormous amount of volatility, and the volatility both on the downside and on the upside makes traders and investors worry. It gives you a sense that what you thought, the risk level that you thought you had in your portfolio, you thought that the stock or the bond that you held would move X% in a day. When you see it moving many multiples of that in a day, you have to take risk off. You have to invest in less risky stuff. That's why we see this flight to cash. So in a sense, the selling, stocks are down because people are selling, and people are selling because stocks are down. There is a cycle here, and nobody quite knows when it's going to break.
All right, the Wall Street Journal's Charles Farrell and the economists Zanny Minton Beddoes. Thank you both.
Thanks for checking out MSNBC on YouTube, and make sure you subscribe to stay up to date on the day's biggest stories. And you can click on any of the videos around us to watch more from Morning Joe and MSNBC. Thanks so much for watching.